In this question, we can see the other payable and receivables ledger accounts, rights account as well as commission receivable account. So here, let's go through the question. Shen is a retailer of men's clothes. His financial year end on 31st January. So 31st January is the financial year end. The annual, so it means 1st Feb to 31st January is the financial year. The annual rates of Shen's shop is annual rate means this amount is going to the income statement. Okay, total $960 will go to the income statement. So we need to, at the last we need to check how much, whether it is extra or less, right? Or it is less than the required $960. So on 1st February 2018, it means this is the opening date. Okay, this is the opening balance. It is Shen owed rates $240 and he paid rates by bank transfer, and as there are some other information also given, how he paid the rates. On March 31st $640, October 31st $720. So total we need to pay actually for the annual rate is only 960, but he paid 640 as well as October 31st he paid 720. So before going to this, we should understand some basic concepts of accruals and prepayments. So here accruals and prepayments, we know that there are few types. Here, just a minute. Yes, so here first of all we should understand, I'm just writing here. Okay, there are 4 types of adjustments. 4 types. First one is, we can say, outstanding or accrued expenses. This is also known as due, etc. Okay, due, etc. Then outstanding or accrued income. Okay, right. Then prepaid expenses. Then income received in advance or prepaid income. Okay, income received in advance. Now understand what is accrued expenses means. So I'll write the meaning here. It means expenses is due but not paid. So it's our responsibility to be paid, right? So outstanding accrued income means what? Income means we have to receive. So income is due but not received. Okay, so this is the 2 adjustments. Accrued is also known as outstanding or due or owe, etc. Okay, that you can understand from the question. Now prepaid expenses, it means expenses paid in advance. Okay, you paid next year's expenses this year, right? Like prepaid rent, prepaid insurance, etc. Income received in advance means same. Income you received advance. Maybe this income is for the next year. For example, you have a contract that you need to sell goods next financial year, but you received advance amount for that. So that is an income received in advance, isn't it? Now, how we will treat this in the income statement and how we are treating this in the SOP is also very important for doing the adjustment entries. So this area is important. So according to the matching principle, current year expenses and revenues will be taken, isn't it? So current year expenses and revenue only will be taken into the income statement. So accrued expenses means what? Expenses is due but not paid. So actually it is your responsibility to pay. So here it doesn't matter whether you paid or received. Okay, if it is related to this year, you have to take that in the income statement. So outstanding expenses is, for example, outstanding salary. Salary you have to pay. Salary is outstanding means salary you have to pay to the employee, but you haven't paid employee. So even though you haven't paid, you need to treat it as outstanding salary in the income statement. It means we have to add it in the income statement. Then accrued income, this we didn't receive till now, even though we will add it as an income in the income statement. So both accrued will be, whether it is expense or revenue, both will be added in the income statement. The next one is prepaid expenses. Prepaid means what? It is not related to this year. We are paying in advance for the next year, so it is not related to this year. So whether it is expenses or revenue, both should be deducted from the income statement, because according to the matching principle, we cannot take the next year's income or expenses this year. So we have to deduct it from the. For example, you have a insurance trial balance figure is 1,000, and this year you prepaid insurance for the next year 500. So what you will do? That will be deducted from this. So the balance will be only 500 in the income statement. Prepaid will be deducted. Okay. If it is outstanding, for example, if it is outstanding, what you will do? Outstanding insurance will be added. Then it will become 1,500. Okay. Like this you will change. Now how we will treat this in the SOP as well? Outstanding we know that it's our responsibility to pay. So it's a current liability. Income means what? We have to get it, isn't it? So anyway we will get it, so it is a current asset for us. Prepaid expenses means what? We paid it in advance, isn't it? So next year we don't have obligation or responsibility, so we are safe. So that is a asset for us. Next year we don't need to pay. Income received in advance, so we have a liability or obligation there for performing the sales or selling the goods next year. So there is a liability for the business. So it's a current liability. Okay. Now, if it is, first of all, when you are getting a question, understand whether it is expense account or income account. That is the first thing you need to identify. Okay. And if it is expense account, check whether there is outstanding and prepaid. Okay. And understand these sides and understand whether it is current asset or current liability. So usually we know that current liabilities will show credit balances, asset will show debit balances, isn't it? So asset will be showing debit balances, liability will be showing credit balances. It means opening balance will be in these sides. Okay, for example, if it is current asset, opening balance will be in the debit side. If it is liability, opening balances will be in the credit side. It means balance brought down. Okay, it means balance brought down figure will be in these sides for the assets and liabilities. Now we will see the question. Now we can see the question. Now you will understand whether it is asset or liability. Shen is a retailer, right? So I told you annual rate is how much? This is going to the income statement. Only 960 will go to the income statement because you have to pay only $960. So whatever the remaining money will be either outstanding or prepaid. Okay. So on 1st February 2018, this is opening balance. Okay. So opening balance, because the closing balance is given, closing date is given, so we can understand this is the financial year. 1st February 2018 to 31st January 2019 is the financial year. On 1st February, Shen owed rate means it is outstanding or accrued, we can say. Okay, it's $240. So see, think accrue, this is accrued rate. Accrued rate means accrued expenses. Accrued expenses is what? You will add it in the income statement. Income statement you will add it. SOP, what is, whether it is asset or liability. So you have to, actually owed means you have to pay. It's an expense, so it's a current liability, it will show credit balance. So you can write in the credit side as opening balance here. Date is 1st February, right? February 1st, Feb 1, 2018. This is the opening balance, so we are writing in the credit side because it is a accrued expenses. So balance brought down. Accrued expenses is a liability, that's why we are writing in the credit side. Okay, so opening balance will be in the credit side, $240. Next, yes, during the year he paid rates by bank transfer on the following date. During the year he paid these rates. So what is the double entry? we paid means rates account will be debited and bank account will be credited. Okay, so this amount rate is debited means debit side of the rate account, isn't it? This side is called as debit side. Okay, rates is a expense account, this side will be plus, this side will be minus. Okay, so here we will write on March 31st we paid, so through bank, so I'm writing bank $640 as well as October 31st also you paid money, that is also bank. So rates account is debited and corresponding entry is bank. So debit side you will write 720. Okay, then what else? So till that we completed. Then next part is commission. Okay, so before going that, I'm just finishing the rates account. So we know that annual rates, sometimes they will give in the question like this, annual rate of the Shen shop rates are $960. So that much only will go to the income statement, isn't it? Income statement. No. So what we have to do here is right, this is the transferring entry, isn't it? So what is the transferring entry of the income for the rates? Rates transferring entry is transferring money to the income statement. Okay, transferring to income statement. So it means what? Rates is a debit balance account, isn't it? So rates will go credit and income statement will be debited. So income statement is debited, rates account is credited. It's in the opposite always. If it is income, income will be debited. This income statement will be credited. So this side we will write at the end of the day, date January 31st financial year, income statement. Sometimes this will not be given in the question. If it is given, you have to write. Okay, how much? $960. Right. Now we will balance the account. We will check whether it is outstanding or prepaid. So which side is more? I think this side is more, isn't it? 640 and 720, 1360. We will write both the side 1360. So there is a balance here. So I am writing balance carry down. This is also 31st. Okay, January. There is a balance 1360 minus 240 minus 960. You will get $160, isn't it? Right. Then we will write the opposite side also, February 1st, 2019. Balance brought down $160, isn't it? So what is the meaning? Here it is in the debit side. So debit side means what? If anything is in debit side, expenses which is there in the debit side means it is a prepaid. You paid it in advance, isn't it? Actually for a year it is only $960. Actually it is $960, but you paid extra amount, $960. You paid this extra amount, isn't it? Because you had a accrued also, after deducting you paid that, as well as extra $160 also you paid for the next year. That is prepaid. That's why it is came in the debit side. This is the debit side balance, isn't it? So this will be the opening balance of the next financial year. Okay, so this is the entry for rates account. Now we are going to the commission receivable account. It's an income account. Okay, commission receivable means it is an income. So credit side will be plus, debit side will be minus. Okay, now let's see. Shen receive a commission from bank who owns shop or shoe shop on the goods purchased by Shen's customers. Okay, right. She provide the following information. These are the commission commission outstanding. It means accrued. It means what? Accrued income. Accrued income. Accrued income is which balance? Accrued income is a current asset. Okay. Yes. Then commission received by bank transfer. So during the year you received it. Okay. So this is the opening balance. Okay, you can see from the date. This is the opening balance. So we have to write, this is, since this is accrued income is a current asset, asset will show debit balance. So it will be in the debit side. We will write here balance brought down, because it's opening balance February 1st. That is 210, isn't it? 210. So we have a outstanding commission receivable. Then during the year March 1st, you paid $210. So you paid, what is the double entry for that? You paid $210 means It's not paid, okay, you are receiving, it's a commission receivable account. So bank account will be debited, commission received account will be credited, isn't it? So we will write in the credit side of the commission receivable account, date is March 1st, isn't it? March 1st bank, because we are receiving it, okay. This is a not paid, it is a receiving, because it's a commission receivable is an income. So it will be 210, isn't it? Is it 210? Check it. Yes, 210 only, both 210. Now commission received in cash also 95. That also income. So bank account, cash account debtor. So cash you will write here. Cash account debtor to commission receivables. It is on August 31st, isn't it? 31st. Dates are important. Okay. So 95 you received through cash. Right. Then what else we have? Is there any other items given? See, on closing date, so this also be taken. On closing date, outstanding commission is there $114. Outstanding commission. So outstanding income. Income means what? Outstanding income or accrued income. Okay, both are same. Accrued or outstanding income, it is a current asset. So balance brought down will be in the debit side. So I'll write here. So I think that is the balancing figure, isn't it? So brought down will be in the debit side, right? So I'm writing here balance brought down, and carried on will be opposite this here, okay? Before the total balance carried on, the amount was $114, right? $114. Okay, so this date will be next year, February 2019. This will be January 31st. Okay, understand? So this is the debit balance account. Okay, this is a debit balance account. That's why commission outstanding is a accrued commission is a current asset. That's why it is in debit side. So balance brought down will be in the debit side. Now when we are balancing here in this question, you can see the amount previously they given that during the year 960 is the annual rates. In this question it is not given like that. So we have to find out what we have to find out the income statement amount. Okay, so now we will balance it, because this we received in the last question, isn't it? This we received. So here we have to find it out. Just a minute. Okay, now when we are totaling, we will get the credit side is more, isn't it? 419, 210. This all this you total it. Okay, this also we will write here. Then we will because already balancing figure is there. So whatever the remaining one will be, that amount will be income statement amount. Okay, this is income statement. So here it is the balancing figure. Okay, if income statement is there, this will be the balancing figure. This one. If it is given, income statement will be balancing figure. So the remaining balance will be 209, which is on January 31st. Okay, so understanding this concept is really important, whether it is a current asset or current liability. That is more important. Okay, yes, that's it. Thank you.